Thank you. Let's move on swiftly, picking up exactly where we left off and reflecting, I think, the kind of things we've been hearing, particularly about that real concern about, and I'm paraphrasing here, social stability, the stability of capitalism, not put on the agenda by me, but by others on this panel. And I think that's worth reflecting on, given the confidence certainly there is in Asia at the moment. Let me introduce, as well as the chairman again, Khaldoon Khalifa Al Mubarak, welcome, who is chairman, chief executive and managing director of Mubadala, the investment company in the UAE. Welcome. Mukesh Ambani, who's chairman and managing director of Reliance, I should say, and Resilient Reliance in India. Plus Kirill Dmitriev, chief executive of the Russian Direct Investment Fund. Welcome, Kirill. Let me pick up that first question which I gave to the other panelists about, is this a time of heightened uncertainty? Do you disagree with anything you've heard about the level of uncertainty? Because Mukesh, you come from India. I flew in from Mumbai yesterday. There's a palpable sense of the growth rate going down from 8% to 5%, of nervousness. Diwali, everyone's celebrating Diwali, but a nervousness that actually the great Indian success story is beginning to come a bit unbuckled, not least because of what's happening with unsecured loans, $200 billion worth, plus what's happening in the banking sector.
Well, I think that if you go to the theme of uncertainty, and let me first comment on the global picture. I think that I agree with the other panelists that the world is transiting with the introduction of new technologies, and this is the first time that we've got simultaneously 4 or 5 new technologies combined with digital that are really transforming the global economy. And this is, while it brings in uncertainty, I think it brings in tremendous opportunity, an opportunity that has never been seen by humanity before, to seize that opportunity and to transform the world is the way I see it. And what I really see in this country, and I have been coming to Saudi Arabia for the last 20 years, but what I see happening, particularly in the last 2 or 3 years, is transformational. For me, this is like the 1980 event in China or the 1990s opening up of India, where India really came up on the world map, and with the clear articulation of Vision 2030, the acceptance and acceleration in terms of just the ambition of the vision to transform this economy and to play the leadership role, right? As a businessman and as an investor, I am all in terms of investing in this country before everybody else does. So yes, uncertainty, but to my mind, a great opportunity. Coming to India, right? I think that between the two countries, there are really 3 major factors, and we've all talked about it. One is what I call the technology accelerator, and India and Saudi Arabia both can take advantage of that. The second is the demographic accelerator. Remember that India is a country with 65% of its population as young, and so is Saudi Arabia. So both have the demographic accelerator. And above all, there is the leadership accelerator. Both our countries are blessed with leadership that is unique in the world, at least in today's time. And if you look at what's happened, yes, there has been a slight slowdown, but my own view is it's temporary. All the reform measures that have been taken in the last few months will see outcome, and I am quite sure that in the coming quarters this will reverse.
We'll hear, of course, directly from the Prime Minister himself from India this evening. Khaldoon Mubarak, your view, particularly what Mubadala has been doing, you've been foreseeing these kind of challenges for a long time. Do you see heightened uncertainty which at the moment you at Mubadala and in the UAE are nervous about or not?
I think we've been seeing heightened uncertainty for a while now. This is not a new thing. For the last 15 years, we've seen an escalation, a gradual escalation of this uncertainty. And to be honest, in my view, I expect the future is going to be more of the same and an increasing sense of uncertainty. But that doesn't mean I'm not going to say that's a good thing or a bad thing. That is kind of the reality of the world we now live in. Now, from that perspective, one has to look at, okay, in this environment, where is the opportunity? We as an investment institution, I think, had a position, had a portfolio over the last 20 years that we have tried to navigate, shift, pivot through this uncertainty. At the same time, I think we have the benefit, being a sovereign fund, to take a long-term view. I feel for the challenges of many of my colleagues, particularly the ones leading public companies and that have the pressures of that 1 year, performance. I think from our perspective, while that annual and yearly performance is very important, of course, and our shareholder expects good yields and above market performance, we still are programmed and are designed in a way to take a long-term view. And I think when you are designed and programmed to take a long-term view, that helps you, I think, be, I don't want to say more sensible, but I think manage through that uncertainty with a bit more comfort.
Are long-term views, though, as reliable as you might assume?
No. I think I will echo some of the words that Steve, Ray, and the gentleman before in the previous panel. I think the power and disruption of technology is going to make it impossible, not virtually impossible, impossible on the prediction side. And I think you have to be nimble. You have to be able to continue to be close to the markets, close to the industries and the sectors you're involved in, be very well versed in the language of artificial intelligence and in these disruptive technology companies that are coming all over the world. I think that is an absolute necessity.
Kirill, when you look at what you're investing in, pick up for what we've heard from Khaldoon there, about how long-term the view can be. If it's about economic ambition for a decade, is that the kind of time frame that you can still work within, given the enormity of, as we've heard, uncertainty?
Well, I think, as we discussed, there are lots of uncertainties, and the first part did excellent job on this, and we know about fragmentation of ideas. I think there's almost weaponization of ideas, because people are so fragmented, they listen to their news, and the fragmented fraction listens to their news, and they become so convinced that the ideas get really weaponized, and there's lots of uncertainty, major geopolitical risk. And trust me, if there's a major war, or God forbid, nuclear war, nobody will care about monetary policy. So those geopolitical tensions need to reduce. But I think this panel is going to be a bit more optimistic than the first one. And I have some solution, and my solution is the power of sovereign wealth funds. And I believe if you look at the history of sovereign wealth funds, they were very passive in the beginning, were invested mostly outside of their countries. But Yasir here and Khaldoon demonstrate an example of very active, value-creative, transformative sovereign wealth funds who are transforming their economies. And I believe it is the power of sovereign funds that is going to be particularly useful going forward, because as Khaldoon mentioned, they can plan for a longer horizon. They have lots of capital to deploy. They actually can work with regulators even more effectively on things such as AI and others, and they have a very big ecosystem of their companies. For example, we have 70 companies in our portfolio that are about 8% of the whole GDP of Russia. So when we partner with Khaldoon or when we partner with Yasir, we can open them window into 8% of Russian GDP right away. When we launch AI, and we believe AI will introduce 20–30% efficiency in many industries, we can do it in many companies right away. So my solution for the future is actually the power of the sovereign wealth funds to do transformation. I think it's very wise what Saudi Arabia is doing to put money from Saudi Aramco IPO into PIF, and it's actually putting money behind this idea that sovereign wealth funds will be transformative, and us working together across different nations. We form ecosystems not only in our countries, but across our countries, and enables this ecosystem of lots of global companies to cooperate much better together.
Let me therefore, given you're putting a lot of weight on the faith we should have in sovereign wealth funds to be stable, to be wise, how do you define or redefine or modify risk in this environment, Kirill?
Well, I think risk is definitely all over us, but McKinsey used to have this phrase of no regret moves. I think there is a no regret move for many businesses to invest in AI, and I think this is something that has to be done. So there are definitely huge risks, and by the way, we believe those risks need to be reduced. Our partnership with Saudi Arabia is an example of a major geopolitical risk reduction, because we were in very difficult political circumstances 7 years ago, and we said, let's set aside Syria, some other problems, let's focus on trust and common solutions, and we were able to do it in 6-7 years. So I think there are ways to reduce risk. We need to reduce geopolitical risk by working together, by being much more open, and we need to reduce company risk by pursuing technology investments and others that are clearly going to increase efficiency.
Mukesh, and both of you, in fact, the redefinition of risk or the refining of risk, if there is this level of uncertainty?
Well, I think that for businesses, the critical outcome is how do you serve the markets and how do you serve citizens in your own market. As long as businesses are in this age of transition, serving the people correctly, right? You have optimal risk, and the definition of risk is, are you really, at least from my point of view, as a business, is are you creating more societal value? Are you contributing to a better society tomorrow? And that's the best way of de-risking.
But let me just pick up what John Waldron was saying, which is widely warned about these days, and you're beginning to see it significantly in India, that the next generation builds on the findings of the FII Institute yesterday, talking about AI and the impact on jobs, is if you're serving society, society expects good delivery of a better way of life, of better prospects and so on. And what you're beginning to see in India is real concern among those who are well qualified that they simply can't get jobs at the moment, which then creates a greater risk of instability. And I'm using that single noun in order to get over a point here. But do you see that as a real paradox and conflict here? It's all very well saying that you can redefine risk, but actually you've got to deliver.
Absolutely. And I think that, personally, I don't think that, if really, if we think about technology and execute technology, including AI and robotics and drones, right? They increase productivity. I agree with the earlier panel that they will increase jobs. And if we look at the last 200 years of technology, we've always had this fear that our jobs will go away. I think that human imagination will always find something to do. On your second point, right, I think that for India, we bring in 15 to 20 million youth into the economy. For us, our challenge is to skill and educate this youth to the needs of the economy. I think that if you look at the startups in India, and if you look at the whole startup economy and what is happening in Tier 2, Tier 3, Tier 4 city, it's a completely different energy, and we will make progress in terms of making sure. In fact, I think that the youth of India are really the driving force and the reason that India will propel itself to the third largest economy in the world. So for me, that's not a risk. It's actually a huge, huge advantage. And yes, you will have some hiccups, but no road is absolutely smooth and straightforward. So when you take an outside-in view of India, look at it as a whole and not in bits and pieces that you sometimes pick up.
We look forward to hearing what the Prime Minister will say later. Khaldoon, your view about this, about sovereign wealth funds, the importance of sovereign wealth funds, but how do you redefine risk going forward if there is this greater uncertainty, as you've conceded as well, not just in the next year or two, but over the next decade or however long we want it to be?
Well, I'll tell you what we're doing at Mubadala. What we're doing is, in the short term, we're continuing a trend which is looking at mechanisms to invest with downside protection, mechanisms that give us the ability to manage through potential downturns in an effective risk-adjusted way. We remain long on the United States. I think I echo many what I've heard. The United States remains a very strong market. I see that continuing. And I think as an investment company like ours, you will see us continue to take a long-term view on the United States. We will continue, and we are now taking a long-term view also on China. I'm very excited about what I'm seeing in China. We've been active in China. I think many sectors listen, regardless what happens on the trade war, regardless what happens, I think on the geopolitical side, I think the reality is there is a tech race between the United States and China, and that's not going to end, and that's going to be with us for the next 100 years. And within that, that's fine. I think from an investor perspective, there's great opportunities in that space in the United States. There's great opportunities in China. I'm a big believer, if you go spend time in China, the Chinese entrepreneur is very aggressive. They have the mindset of a winner takes all. And I think in that space, that's going to be difficult to compete with, particularly with the way I think the regulation in China, I think is very permitting within that space. So I think that's going to be an interesting space. Obviously, you have to make sure, you have to be on the ground. I think one of the things we in Mubadala also have been doing, and that's been a shift in our strategy over the years, which is actually we have to be on the ground. We have to have teams on the ground, be it in New York, be it in San Francisco, be it in Beijing, in Hong Kong, in South America, the markets that we're focused on. We also, I think, have to not forget that even in Europe, you look at what's happening in the tech space in the UK, it's very interesting. In France, Paris has just, I think, gone ahead of Berlin. In that space, there's tremendous entrepreneurship in that space, and I think setting up VC capabilities in London, in Paris, I think that's a space that I see also growing. I think all of that also comes back to what Kirill is saying. We have also a responsibility as sovereign funds to help our economic development domestically. And I think by investing in these companies, by being all over the world, by being from a geographical perspective in the UAE, in the center between East and West, I think there's a lot of opportunity there, which we're also doing a lot of work in monetizing. We are monetizing assets that we feel have reached a stage of maturity and returns. It's a good market right now, so we are monetizing, but we are also reshifting into new areas like life sciences, medtech, agri, and again, you can see from these sectors, we're also preparing for a correction that's going to come, and I don't know when that correction is going to come.
Your Excellency, I'm going to come to you one moment to round off these two panels about your reflections, particularly on sovereign wealth funds. But can I go to Kirill first? Because, Kirill, there are significant geopolitical changes taking place involving your country. After all, your president was here less than 2 weeks ago with the three colors streaming from the warplanes flying overhead. But you're also building a significant new relationship with China, the Russia-China axis. Help us understand where you, as a sovereign wealth fund, see this now going, this relationship, and the importance of the geopolitical changes that President Putin is introducing.
Well, first of all, we believe that partnerships is really key in the uncertain world. And for example, when we make investments, we have Russian-China fund, we advise with them about technologies there, we advise with Mubadala about technology here, so we really get a very global view. On the geopolitics, I believe Russia-Saudi reconciliation is one of the greatest historical examples of quick reconciliations that brought significant value and stability to oil markets. And Russia is open to cooperate with China, with Saudi, with the US, and we believe that the tensions really need to subside. And we as sovereign wealth funds are playing a role in building trust. Because once you invest together, and with Mubadala we have 45 investments, good returns, that builds trust to do more things. So I believe trust is actually what is needed, and I hope that in the next couple of years we'll build more of a trust with the US, and we'll be working hard on this.
And your long view of China?
I think it's positive. They will have some obviously short-term difficulties because of the trade wars, but fundamentally because they can really affect regulation on AI and other key areas much more effectively than other countries. I think they're really going to be economy number one without question.
Can I jump in?
Very quickly.
Can I jump in quickly? I think just to echo what Kirill has said, trust is so important, and confidence, and I think especially between sovereign funds, the establishing that level of relationship. You know, when we invest in Russia, we entered Russia, we didn't know Russia. We needed a partner. RDIF came in, we've invested together in a very difficult time, 45 transactions that we've monetized a lot of.
Right.
Double-digit returns.
Let me go to you, His Excellency. Final word, Your Excellency. When you hear this about the sovereign funds and the power and the influence and the importance, what's your quick reflection, please?
What I said earlier. We need to have some investments with impact. That's what Kirill was alluding to, and also Khaldoon. And that's the difference between investing for long term and investing for third party. So to us, we have a longer term view. We lead in these changes between sovereigns, between economies, between companies, and we can get them all to do the things that have some positive impact, not only commercially, but to us. I mean, and that's the way we look at most of our investments. It's not only commercial, it's not the returns that we want to achieve. We want to achieve also the job creation, the GDP growth, all the economic figures, the prosperity for the society we're in. We want to achieve all of this while making money. And that's to me, the real joy of being on top of a sovereign wealth fund. One thing I would like to mention here, this is the longest bull market in the history of mankind. And that's why everybody is so worried about what's going on. And that's maybe to your earlier question, heightened uncertainty. I think the uncertainty is there, definitely. But if you want to compare ourselves today to 2007 and 2008, look at the figures and look at the evidence. It's not there yet. Most of the uncertainty that we have, it's based on opinion, and it's based on fears from, is this going to last forever? That's the major uncertainty. Now we have a number of different elements that can have an impact positively or negatively. As mentioned, the trade war is a big thing that is not only impacting two countries, but I think it's impacting the whole wide world. It's going to be impacting us here in Saudi, it's going to be impacting India, it's going to be impacting China, Africa and Europe. It's not going to be only between the two countries. So we need to have a closure to this. And I think to have an agreement, it's going to be good for all of us, not only the two countries.
I have to ask you, you can see we're out of time, but I have to ask you as your chairman of Aramco, how do you see Aramco's relationship with investors evolving over the next 10 years?
That's part of why I was appointed. I've always been representing shareholders. We have in PIF more than 85 companies, and I always sit in the shareholders' seat, which is I need to see performance. I need to see the company is doing good for its shareholders. So today, if you look at Aramco, historically, it had always the chairman of Aramco as the oil minister or the energy minister. And that by itself is a conflict of interest. That's why I was appointed there to represent all shareholders. So currently the shareholder is the government, but soon I think we will have more and more shareholders from institutions, retail.
Anything more to add on that?
Thank you very much.
I know there are regulatory restrictions, but I thought I'd have to ask the question. Chairman, thank you very much indeed. And gentlemen, thank you very much indeed. And I hope we've enlightened you about the way ahead in heightened uncertainty.
Great.